Hello traders, and welcome to NOFT's Weekly Market Compass, where we help you navigate the week ahead. Our Weekly Market Compass is brought to you by our head trader Troy, who in between assisting traders and taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's guidance, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade future stocks, options, or Forex. From everyone here at NOFT, good hunting out there and happy trading. Here's Troy.
All right, so let's go ahead and look at news for the week. Today's Monday, December 11th, and you can see on forexfactory.com here that from a news perspective, the biggest news item we have here for the U.S. is the JOLTS job openings. This is a yellow, which is a low impact, so don't expect it to move the markets in any way. We also have at 1 p.m. the 10-year bond auction, again, not expected to impact the market at all. However, from a macro perspective, I actually pay attention to the JOLTS job openings number here because if this is a leading indicator looking out farther away. So if you don't have job openings and they're not posted, then we're not hiring new people. If we're not hiring new people, there's not more money flowing into the local economy, et cetera, et cetera. So usually it takes anywhere from 3 months to 6 months to actually fill an open position. And so, 3 to 6 months from now, that new person has been hired. And they're finally got a salary check coming in, and if you're unemployed and you finally got a check in, you know what you're doing with that. You're definitely spending it. So keep in mind that this is maybe 3 to 6 months out if this number is a good number. Sort of projecting what's going on out into the future. So not a lot going on today from a news perspective. Over the weekend, really kind of a quiet weekend. I didn't watch too much TV or too much news over the weekend, but I haven't seen much. Tuesday, we've got some interesting stuff. We have PMI month to month and core PPI. This is producer price index. This is what producers are paying. So that's a number you're going to pay attention to. You see it is a red item, high impact. That's at 8:30 on Tuesday morning. Then at 2 o'clock, we have the ECB President Draghi speaking. This will affect the euro and also the dollar at 2 p.m. So those are the two big things that we're going to be watching for on Tuesday. PPI at 8:30 and the ECB President Draghi speaking at 2 p.m. And that's pretty much it. There is Aussie for the Royal Bank of Australia speaking. Governor Lowe is speaking at 5:15 p.m. Notice that at that time, at least on Eastern time, the futures markets are closed from 5 to 6 p.m. So even though it says it's a high impact, there's not, unless you're trading the spot currency, there's really no way to take advantage of that. On Wednesday, December 13th, midweek, got some good stuff going on. Finally got some good stuff going on from a news perspective. 8:30 in the morning, we have CPI and core CPI. Crude oil inventories at 10:30, 2 o'clock. Woohoo! Fed day. All right, Fed statement, federal funds rate, FOMC economic projections, all kinds of really good stuff. Now, what do we expect? We expect them to raise interest rates, very, very small, quarter point. But this is always a red item, and it's going to be wild and crazy around that 2 p.m. Section or time frame. 2:30 FOMC press conference, all that's red. So a lot of red going on Wednesday. Wednesday is sort of what we've been waiting for quite some time to see if the Fed, what they have to say about the future economy, and of course anticipating that rate increase. Later in the evening, 7:30 p.m., we have unemployment change and unemployment rate for the Aussie. That will affect currency, pretty good size, high impact, 7:30 Eastern time. great evening to have some action in the 6A. Will definitely be so. Also, China have an industrial production year over year, red item here at 9 p.m. Again, these red items normally will affect the U.S. dollar as well as the local currency that is relevant to the news item. Okay, but they all have a factor in how the U.S. dollar is bid and can affect lots of different markets. On Thursday the 14th, we have some Swissy news, some red Swiss news, not particularly, unless you trade, what is it, the 6MS? I can't remember exactly which one is the Swissy. Those will be impacted. I don't pay too much attention. I will be paying attention to the Great Britain red numbers. They've got some things at 7 a.m. That's the beginning of the U.S. market. I'm not awake yet at that point in time, but there are some pound numbers that will be coming out at 7 a.m. Thursday morning. But again, looking forward to the U.S. stuff, right? The euro at 8:30, the ECB press conference, but you have core retail sales month over month, and unemployment claims all happening Thursday morning. This is probably the best week of December, considering that the rest of December is all holiday related, and there'll be a very limited amount of news coming out. So they're cramming it all into this particular week. So we got some great opportunities for increased volatility here on Thursday, 8:30. Jumping up, there's several Bank of Canada governor, Polzaz, I'm not sure how you say his name, Plaz, speaking at 12:45. Again, that'll affect 6C. Again, why do we go over these things every morning and particularly the whole week on Monday mornings, is to sort of identify the times you want to put down on your calendar, on your trade sheet. Say, hey, I need to be careful around these times because volatility is going to increase dramatically slightly before and definitely after the release of these items. Okay, on Friday, December 15th, finally a slow day. Friday will be slow. However, there are some interesting numbers on the U.S. side on Friday, particularly the Empire State Manufacturing Index. Now, this is a medium impact expected, but this is the New York, New England area, particularly New York Manufacturing Index. Now, if you manufacture something in New York State, you're paying more for labor than probably any other place in the U.S. Okay, maybe California, but I would have to say that from a manufacturing perspective, New York has got to be the most expensive place to manufacture anything. So when this number comes out and it's good, that is so good for the rest of the economy because it's always obviously cheaper everywhere else. So if this thing is going up, that's a huge boon for the manufacturing in the U.S. So I do pay attention to that particular number. At 9:15, the capacity utilization rate. This is extraordinarily important. I think this one should actually be a red impact because the reason why it's not a red impact is because this particular item it takes a long time for capacity utilization period to change. Okay, so because of that, it's a low or a medium impact. But if we're running at 77%, when we run at 85%, what's going to happen? They have to build bigger plants. They have to build more plants. They have to expand. So this is important at paying attention to exactly what's going on. Again, future, 6 months to a year away, this number becomes really, really impactful because if we don't have capacity, we have to build more capacity. We have to, again, this is like thinking about a local manufacturer that adds a third shift. They added a third shift. They just literally increased their capacity utilization rate by a third, right? Okay, so always paying attention to that. Also industrial production. Again, this is sort of behind. I'm not paying attention to the industrial production number here, but definitely the capacity utilization rate. And that kind of wraps up the entire week. So let's jump over and look at some charts. Look at some long-term charts. Since Jason is not coming in today, I'll cover his as well. So look very quickly at oil. Oil has rebounded. We pulled a Fibonacci on this move down, this leg down. We went right at the 61.8. I can still see us coming up and touching the 61.8 here. I can definitely see crude oil trying to retest this little double top here, and that would be a place of interest for a short. Again, this is just a little 3 steps up, 2 steps back, that type of a waltz going on with oil. Still continues to be overpriced in my opinion. Oil possibly retesting that. From the bottom side, we could definitely come back and retest the lows from the last couple of days. I think the 56.40 here is probably a better potential target on oil. Again, geopolitically, nothing has really changed, and that's why we look at it. Gold, again, our fear and greed index here. We have had a bunch of fear that's literally been sucked out of the market. Little consolidation here over the last couple of days. We'll continue to see that to down as less news is impacting anything. Okay, and I think this is particularly interesting with the situation in the Middle East, with Jerusalem being declared, or not declared, but the U.S. recognizing. I really thought we would see gold come up, but you're definitely not seeing that. So it's very interesting to see how that is all panning out here. The market's just not pricing it any kind of risk based on the Israeli-Palestinian situation, which I think is very interesting. Also, North Korea has been relatively quiet, so we're getting this down to sideways action, and we'll probably continue to do that. Again, gold becoming the big fear and greed. Also this weekend, Sunday night, the Bitcoin futures contracts opened. You may see a chart. I'm fascinated by this whole process of Bitcoin, and I'll probably pull that chart up and take a look at it later today when I have time to do so. But Bitcoin becoming something of interest. Again, everything I've read, I don't know how you can expect delivery on the Bitcoin, because apparently they don't have access to the actual Bitcoin. I read somewhere that it was completely so gold, obviously our fear and greed. The ZN, again, it's sideways action, waiting for the Fed to do whatever it's going to do. We hope it's going to increase rates as they have projected, and it's going to go sideways at least until that happens. At least that's my 2 cents worth. Now, I'm going to circle back to the ES and the NQ since Jason is not here today. On the ES, we have switched over to the March contracts. We had a little bit of a pullback here. We've moved back. This little leg down, the retracement went all the way to the 76.4. So I'll take that retracement off. I see that this may be topping out again. We may have another leg to the downside, but certainly within reach of the all-time highs and could retest. From a pure technical standpoint, this double top would be an interesting place to take a short. Of course, as you know, the market's been on a tear, and we've gotten run over many times shorting the ES highs. Be very, very cautious. Remember, the Christmas rally is probably in full tilt here, and so I would pay attention, but double top here is probably where is the only place I'd be interested in messing around with the ES. I don't like the ES at all-time highs. I don't like trading stuff that has no volume profile to pay any attention to. It's just ugly at all-time highs or all-time lows. So these are very, very difficult to trade when they are in uncharted territories. Obviously, above this high here, we have no volume information, so we have less data. We have, it makes trading the ES very, very difficult. And this also happens at all-time lows as well, or not all-time lows, but seasonal lows, so to speak. When oil went down into the 30s, we had to go back like 15 years to find volume data, to find our points of support and resistance that we were looking for. That being said, I'm not a big fan. If it comes up to the high of the day, sure, I'll try to take a nibble at it. From a long perspective, we come right back into this little range right here. This is going to be support. This little high volume node around 25.45 would be a place I might be interested in taking a long, just a hair above 26.45 there. There's a low volume node right there. 26.46 and 3/4 is what I would go long. Nasdaq actually been tearing things up here, but this is a little bit more interesting from a chart perspective on the Nasdaq. We have a little minor double top coming up here, and actually I can see this VRL right here at 23.95 being an interesting area. Nasdaq's obviously not nearly as strong as the ES. Again, this thing is wild. Very careful when you try to trade this. You have to use much wider stops. I use a 20-tick stop when I trade the Nasdaq, which you won't see me do very often. The Russell 2000 has a similar pattern, although this particular pattern looks certainly a lot more like the ES pattern, and I would trade it as such. I do like a little spot here about 1540 right in here as a potential short. Long wise, I'd definitely be looking at 1510 as a potential bounce.